Heidi Hub one, and welcome aboard. Thanks for joining me for the 22nd of the 7th. And of course, it is Trading Buddies, as we all know. You wouldn't be here otherwise, I'm sure. Thank you for being our Trading Buddies on this Monday. I hope you've had a wonderful weekend and are looking forward to getting into some. Oh, I better turn my camera on, hadn't I? Getting into some trading into the week. Pretty quiet one today, I think, from a news point of view. But let's take a look at the usual, which of course is our gold chart, and see if there's anything there that is worthy of our attention. This is the 1 hour chart, of course, and we're looking to trade a breakout of pretty much Asia session. And the high of Asia session to this point is here. The low of Asia session, which is really closed to this point, or pre-London session, let me put it that way. The low is the low of this bar. So the range is pretty tight. That I like. What I don't like is the daily pivot dead ahead. So for a long trade, we would be bashing our head straight into that level. So let me get rid of it. Oh, actually, I'm moving up. There's the low of the range. And there is the high of the range right there. So you can see if we're trading a breakout of that range, we'd be trading straight into the daily pivot. Let me just make that a little bit wider for you. And there's not, although that's a decent reward to risk, I would imagine, to the weekly pivot, but you've got to trust that we're going to go through the daily pivot and hit the weekly. So you've got $13 of reward there, and pretty much the same as risk. In terms of the downside, is there anything underneath us here? Not so much on the hourly chart. There's DS1, but you've got to go through these lows. Don't like it. I don't like the support and resistance that we don't appear to be going live to YouTube. Just let me check that, guys. That's a bit of a concern. I'm sure I activated that. One more tick. Check rather. No, I can't do any more than I've done. Rightio. So no trade on gold. Let's have a look at last week on that gold breakout trade and see how that would have gone. Friday, very clear that was a winner. On Thursday, you would have. Oh, there's the high there. But I don't trade when it's on its high, so I wouldn't have taken that trade, which would have been a loser. And that's why I don't take that, because the first candle of London session is not always, but often a case of one direction, other direction. So that's why I don't trade when it's very close to the top of the range, which would have been right there. So that would not have been a trade for me. Same as we're doing today, pretty much. On Wednesday, where's the 9 o'clock bar? That's it there. So once again, we were right near the low of the range. Wouldn't have traded that. And again, that would have been a loser. One way, then the other. So if you followed my rules, you wouldn't have been in either of those trades. On Tuesday, clear winner on Tuesday, because you would have entered at the high. And on Monday, a little trickier. That's the 9 o'clock bar. We didn't trade that for the very same reason. We were right near the bottom of the range, and you can see why that is a decision that I make. So 3 no trades and 2 clear winners. We got that one, and we got that one. So I think if you follow the rules, those rules, which are proving fairly wise, if I can put it that way, you'd be doing okay. So far, righto, we've had the open, and the range is here and here. I've given you the reasons why I don't want to trade it, because we've got resistance dead ahead and we've got support dead ahead. So no trade for me on this Monday. Let me go through what I am seeing as opportunities for the week. And they begin with, actually, I'll go to the currency indexes first. And we'll start with the dollar. The dollar this week on the back of last week, that is last week. Yes, it is. Last week we had a game changer bar at the end of the day, where we've got a low lower than the previous, and it closed on or near its high. A little bit of a problem with this because I'm not actually sure where this horizontal level lives or where it belongs, to be fair. I've chosen where it is based on pretty much this mess through here, which is the last support that you can see on the chart. But, you could reasonably move it to there, and you could probably reasonably move it to there, catching these support areas here. I've chosen that one because I think it's the most relevant. And that, of course, puts us there, which is crucial because we're bang on that resistance level. So I'm a little bit indecisive as to what the dollar may do next. Gut feel, it'll probably go through that and touch the trade line, at least touch the trade line again, so retest it. But that horizontal level there is a little bit tricky, so that's why I'm not 100% confident that that can happen. Of course, we have had now big news coming out of the States, either overnight or over the weekend, that Joe Biden has finally listened to his cohorts and stepped down, which creates an interesting scenario for me. Ash and I will probably talk about this a little bit later, but we've now got a woman running against a criminal. I have to say that. It just sounds so weird. And not just a woman, a black woman at that. So there's never been a female president in the United States, and there certainly hasn't been a female black president in the United States. What that does to the vote, I got a sneaking suspicion that that actually tilts not the favor, but it tilts it a little bit back towards the Democrats, in my humble opinion, given that a proportion of the black vote that Donald Trump thought he had in the bag may well go now to Miss Kamala Harris. That's her name. Kamala Harris, yeah. So yeah, look, very interesting in the States how the market reacts to that. If the market reacts to that, I really have no idea. But technically speaking, I'm in between a rock and a hard place here. I'm not sure what happens next. If I'm forced with a gun against my head, I'm saying we're going to get a little bit of push on the dollar. Maybe not early in the week, but maybe early in the week. Who knows? So I'm mildly bullish, but I wouldn't say I'm bullish, if I can put it that way. The Aussie had a shocker last week, as did a lot of the currencies that weren't against the dollar. Yeah, hard to say this one too, because it snuck back below this trend line and closed below this trend line with not a game changer bar, but certainly a decisive bearish bar. Is this a bounce off here, or is it a rejection of that level and we're coming back and going back towards the bottom of the range? I don't see any real reason why this can't hit this top level, which is a nice confluence of top of rectangle and trade line, which comes from way back up the top. And you can see every time that the Aussies tried to go down in recent times, it's just rallied back up. That wasn't the case on Friday. As you can see, the weekly bar is very decisive. Again, tough to be committed to this, but I am still a bit bullish. But I'd have to say that bullishness is going to depend a lot on what happens in the first couple of days. And if we do look to be sinking back underneath that trend line, I think my analysis is probably going to be in the opposite direction. The Canadian dollar also had a bad week last week, and significantly similar to the Aussie, came back underneath this trend line, underneath the horizontal level, but now finds itself also underneath or closed underneath that support trend line. We're still on the base here. We still have a higher low. We don't as yet have a higher high, and that's a little bit concerning. Range, that's all I see on the CAD at the moment. Range, news, we've got, I'm not sure if it's CPI or something coming out in Canada this week that may help or otherwise. So you can say I'm pretty much non-committal. The pound, has it reached its its turnaround point, not sure. Again, that's very close to resistance. Do we get one more push to have a crack at these highs? Maybe we do. Don't know. Swissy, back in favour, really, the Swissy. And I said this last week, and I thought the market may go risk off. I think it did to a degree, but is there follow through? That's the question. And a lot will depend on, as I believe it, what the market does in reaction to the new president nominee from the Democrats. Whether we're risk on, risk off probably doesn't depend on that, but I'm still thinking risk off is the way to go, which means Swissy should be okay. Kiwi, I think I'm most bearish on the Kiwi because of two reasons, really. It's come off the top here of this trend line, the resistance trend line. It's put in a lower high, and it's closed below this horizontal level, which is fairly clear. Has been resistance, support, and resistance now broken. Maybe we get a retest of that before we go to here, but this area looks very much like a target on the Kiwi to me. The good old Japanese yen, my goodness gracious me. Having a day out so far today, I see in the last few hours, is the yen, and that potential strength that everyone's been talking about looks to be on the way again today. Whether that's sustainable, in my opinion, that's question mark. But I'm no fundamental expert nor economist. But technically, eventually, this just has to give a decent run. Maybe this is it. Maybe we've begun. That has begun. It's a maybe still for me, though. And the euro, in no man's land here. Maybe a retest here, maybe not. Again, a lot will depend on what happens in the US. And I'm actually bearish because I think this may just look to sneak down and have another have a retest of this trend line. And if that's the case, that makes me bearish euro dollar. And I have indeed placed an order short euro dollar, haven't I? I think I have. On the weekly chart, I have indeed. Let's get rid of these indicators. And again, this is a little bit iffy. Had it bounced off that trend line, I would be saying very confident that this is now going back to a support level, which in the first instance probably looks like the monthly pivot. Didn't quite make it to that trend line, nor this horizontal level, which is pretty clear through here as well. But I am suggesting that close enough may well in this case be good enough. Again, a lot will depend on how the market in the US reacts to all the latest news from there. But I am entering short underneath this bar. The entry is at 1.0865 if you're interested. And I've got a stop loss at 1.0985 with my first take profits. About 3/4 of that risk down at 1.0775. That's euro versus the dollar. Now, I had a little thought in my head last week. I think it was on Friday, and I didn't post this. Might have been on Friday. It was after Thursday when I saw this break and close above the monthly pivot. This is Swissy versus the yen. And I put an entry above pretty much where the entry is for this long at the moment. I put an entry there, it wasn't tested, and price came back to the monthly pivot, but did not close below it. To me, that was a bullish sign, and it also gives me the indication this is a false break of the monthly pivot. Now, as I just said, the yen's caught another bid today, and Swissy yen suffering at the hands of that, as is everything against the yen that I looked at just recently. I'm going to keep this order in place until that we get a close below the bottom of that range. If that's the case, then this is obviously an incorrect analysis, or it's just not going to work. Simple as that. So if you want to follow that one, completely against momentum at the moment, entries are 177.59. Stop loss is 180 pips below that at, it'll show me 175.79. And I'm just going to sneak some profit in before we get to this breakout area here. at 178.49. I'm going to remove half my risk at that point and make this safe. If not, put a stop to entry, making sure it's a winner, because I do think the yen eventually has to go. We all know it does. And if this is the time, then this probably won't take out this high. And that's why I need to get my money in the bank before then. If, on the other hand, the yen is not going to reverse, then this just keeps going. And I'm happy with that also, if that happens to be the case. As far as everything else is concerned, I don't have too much more. I think what I've already discussed is probably where I'm at. And I don't think I'll go any further until I get some more information from the market. Here's Ash. G'day, mate.
Hi, buddy. Yeah, I've got a trade idea actually on the FTSE long, so UK 100 long, which I will bring up the chart. Hold on a second. Let me just make sure I've got the right thing up here. Where's my... Here we go.
Got a funny feeling you'll be disagreeing with me this week.
What's that?
I just got that sneaking suspicion that you're saying Swiss yen long. Are you mad? The yen's going like gangbusters.
I would not go with the Swissy long, no, but I would go other things against the yen. Definitely not the Swissy. The Swissy and the yen are way too closely correlated, in my opinion. You know, considering the market condition. Now, I apologize for the color of this, but this is just the easiest way to see these pivots. So, yeah, we just had this little bounce off the weekly pivot. Now, I don't know if it's the same on an ATW account. I've got a trade on both, but let me just sort of show you. Let me see if I can find it on the ATW account as well. There's the ATW account. Let's see if this. I don't know if I. Probably can't show that, and I know the guys in the room are probably ATW clients, but it's more the rest of the world. In fact, we can have a sneaky look to see if it's there. It does look like it's there. It should be in the same place. So there's basically a weekly pivot here, but also if you look at last week's bar, it's basically sort of trading off the top of last week's bar. But I'm not using Friday's bar as the stop. I'm using today's price action as the stop. And the reason for that, now there is a monthly pivot which is floating not too far away. So at this point, the trade will be made safe in some way or another. So I'm not looking for a big move necessarily, but I don't. The way that you make your trade safe is going to be a choice of your own. If we get there, now we're looking at around about another 20 pip move. So we're looking at a move that's going to take us to probably this high here actually. So there's the initial target. Now, when it gets to that point, decisions need to be made, and there's two ways you make a trade safe. You either move your stop loss to break even, or you take half the position off. And if you take half the position here, that means that the entry to stop loss is absolutely flat. So if it comes down all the way down to the stop loss, then you've lost nothing because you've already sort of taken half profit. The benefit of doing it that way is that you give your trade room. The downside, of course, is that if it does just continue to go to the upside, then your likelihood of making money is diminished by half. So, you know, that I'm going to leave for everybody else to decide, you know, see what they want to do. But we're looking initially for around about a 1-to-1. So it looks like it's going to be about there. But around about the monthly pivot kind of point is the idea. Now, I know you probably won't get quite the same price as I would, and my advice would be to put a limit order in. You know, by no means do I think it's just going to go to, you know, straight to the upside here. I think we probably will float around here, or potentially we could float around here. We don't need to worry too much about the timing. Look at this bar, very indecisive. So you can put a limit order. You could even put a limit order a little bit below. There's probably a couple more pips to be grabbing here. So 81.98 would be a decent enough entry. And if you don't get triggered in, you don't get triggered in, no big deal. And then we can slide these stops up if the market does decide that the FTSE is a good one. Now, talking about why I think the FTSE is a long is to do with the interest rates, potential interest rates lowering from the United Kingdom. And I look at the pound and I think lofty. This seems to me like it is primed to reverse. You can see a little bit of evidence on the dollar, not so much on the Kiwi, of course. And you're going to want to pick the right one. I quite like it against the CAD. And I like it against the yen, just to bring your yen narrative in, mate. I really like the yen at the minute. I think the yen all of a sudden is starting to look like hot property. I also like it against the Swissy. So I'm looking at shorts basically with a pound. This one I'd like a rally first, but I would and the yen, to be fair. But I like the pound short, and the reason for that is we've had 2 consecutive months now of 2% CPI data. The election is done. Now, that was one of the reasons I think they didn't lower interest rates last time out. The election's done. We've got a new government in place. The feeling of the country is pretty good and positive. England got to the final of the Euros. Does help. I mean, it sounds crazy, but it does help. So sport does help.
They didn't win.
They didn't win. They didn't win. No, they didn't.
I take your point. There's buoyancy in the air, and
I think there's a little bit of buoyancy. Yeah. You look at some of the numbers that are being provided by tourist boards and the holidays that are being, effectively already booked. There is money floating around. People are a lot more comfortable, a lot more confident they had been. Now that suggests that the UK economy is going to go through a little bit of a boom time. And I like the FTSE for the reason. Now, that means that I would like to attempt to hold on to this position at full value, which means I'm going to have to move my stops to, at or near break even, and expect to get turned over, to be fair, but I'll try and re-enter again if it does turn me over. And the reason I think I will probably get turned over is that I don't think the market rally is quite ready, but I do think that the pound is about to reverse and come down. And I think because we've had 2% inflation, CPI data, consecutive months, and there's a Bank of England meeting on the 1st of August. So we're only looking, I'm not sure what that would be. What's around about a week or so away, isn't it, mate? 1st of August is on the Thursday next week. I think there's an interest rate reduction coming. That would tend to be good for stocks. And I think if you couple everything else in, as I say, the run to the final in the Euros, the fact we got a new government that is, boosting spending, the fact that you're looking at some of these other data points that are suggesting that the British citizens are spending money as well, I think there's a bit of confidence floating around the market. So I like the FTSE as an opportunity to express this more than I do really, the pound in a lot of ways. So that's what I'm going for, mate. But I'm you look at this and I think most technicians would say it's going to struggle to get through there. And for that reason, you've got to make things safe. I don't think either, and it's fine to take half profit as well. That would be that's a relevant strategy. Let's see if we've picked a low of a shape here. The problem is it's got a decent, if we leave the if we just move stops to break even and don't take the profit and make half the position on, it could do this quite easily and come all the way back down to this particular point, test this high again, take this out and then turn in almost the same area. But this is getting pretty close to the apex here. So what I'd love to see, of course, is just a straight break. Just break through this point, then those stops will be really safe, and then we'll see if we can get back to these highs and beyond. But I think the FTSE is ready for a run, mate. Now I don't feel the same about the rest of the global equities. I think the Nasdaq could struggle for a bit. I see the French equities struggling for a bit, but I think the UK is in a very unique position because they have reached 2% faster than anybody else, and the Bank of England are ready, I think, to lower interest rates from 5.25% to 5%. I think would be more than expected because that's still high. and inflation kind of globally is still quite elevated. Look, market's coming down now, so there's still an opportunity to kind of get in at a decent price here, in my opinion. Now, of course, we could be completely wrong, but trade might be an absolute dog. But that's the thinking behind it, mate. That's what I'm going for, mate. At the minute, FTSE 100 long, and the price point is going to be around about 81.97, 81.98, something like that. On the accounts, stop losses down at 81.60. But if it breaks this level here, then the likelihood is I'll be closing the position. So tighter than it looks, but that's
Cool. So far, guys, you've got three things to look at. Ash, of course, on a much smaller time frame than my own. Both of my trades are on weeklies and may not trigger until Wednesday or Thursday. Who knows? We shall see. Lemeroy's on YouTube has posed or popped the assertion, and he's 100% right, of course, that the Kiwi and the CAD, both versus the yen, are nicely bearish, as is just about everything against the yen at the moment. The problem I have with that is I can't see an entry for me. I just have to have some sort of lower high to give me the confirmation that this run is really about to begin, or has begun, if I can put it that way. Until then, I'll just miss out on everything that goes south. And I'm okay with that. I don't have a problem with that until I get a decent pullback and see a higher low. Then I'm out of the game. But I can see 100% that this could very well be the start of something very big. In which case, I'm likely to gather the second move, not the first.
Yeah,
so is that the Kiwi? Yeah. And look, as I said before, I'm bearish the Kiwi, so I'm 100% on board with you, Lemeroy's.
Yeah, if you're in the position, then absolutely fine. It's just not one of those ones that you would take on board. When it goes this far like this, then I guess I don't love the term, but the easy money on the longer term timeframes has been made. So there's no easy money now in the longer term timeframes. The shorter term timeframes, like 4 hour and below, there's still opportunities because there's really good momentum to the downside. So there's going to be some intraday opportunities for sure. But when you're looking at the longer term timeframes, like the weekly or even the daily, then really the easy money's done. And I think it's going to get harder down here. We've got a horizontal level. We got this trend line that, the trend line isn't even quite, it's just about a 1-to-1, just about. If you were to kind of go short now with a stop at the high of today's bar, you're just about going to get to 1-to-1. Well, that's not very easy. And remember, we've just started a new week. So
and is that the right risk? I mean, that's not the right risk either, is it?
No, it's not. No, it's not.
Where's a breakout level? It's way above there. So
yeah, you're right. Yeah, you're right. This is the point really that we're looking at sort of like different zones here. But this many red bars without any kind of retracement doesn't make the Kiwi yen very attractive at all. However, what we do have is a very very good currency, I think, now with the yen, and there are other opportunities. The pound. I mean, even this is a little bit low, but this one might still. It's a lot better, and it still might be an opportunity because the interest rate hasn't been lowered yet. Then everything from this point is speculation, and I think there might be a little bit of push and pull with this one. So I think there may well be an opportunity to try and take a pound yen short. I wouldn't be interested any time before we kind of get some sort of, let me think what that would be. Yeah, I wouldn't mind that point there. So we're looking at 204.60. But the price of something is so important. The price that you get in on something so important. Just the direction alone will only see you so far, because the problem is you've got to sit through. If you're right on direction but wrong on price, you've got to sit through the price coming back at you, looking like a potential loser. And that could last a few weeks as well, or a few days at least. And the other issue with that is the swaps. The swaps against the yen are pretty hideous. So waiting for a position to actually sort of take hold could actually cost, you know, some decent money. Now, the thing about the yen is that COT data is been hot. It's been really hot for a long time, and it's starting to play out. And in actual fact, last week, what I saw with the COT data was that it went from an absolute extreme buy to an extreme buy. So we're just coming off a little bit. So what that tells us is that some of those commercial positions are satisfied, which means that they're probably not going to continue to build into it. Now we see the speculators; they're the ones that are going to kind of drive the market now, sort of, you know, in the direction. But which is why I say the easy money's been made, because the commercial traders is really where the big kind of guns are kind of sitting. And they've just started to shave a position a little bit. They're still extreme buy, but they shaved a little bit last week. Seasonally, August is incredibly solid for the yen, very strong. So there are sort of like some decent factors. There are some bullish signs really for the Japanese yen as a currency. And just picking it up against the right currency pair is the right thing. But I wouldn't be surprised at all. Now, incidentally, the pound is incredibly weak on the COT data. So if you were just to trade as COT alone, the pound yen is a cracking currency pair to look at. But now it's price. It's good. We've got to get the right price if we're going to trade this. And if you don't get the right price, I'm with you, mate. You know, if it goes without us, it goes without us. It's just one of those things. You're just not going to get every single trade, are you? It's just not the way it is.
Look, at the end of the day, there will be an opportunity. It won't go down like a rock. It will go down quickly. We agree with that, but there will still be an opportunity to get into this if it manifests. But this is the beginning of the massive resurgence, because there's a long way to go. A long way to go.
Yeah, I've just realised I'm probably showing you the wrong chart.
CAD yen.
Oh no,
was the other one that Lameroy was thinking about. What do we think about CAD, Canadian dollar? That's got news this week, as I said. I can't remember what it was.
Are we on this chart here, where my arrow is?
Yeah.
Oh, cool. The CAD, yeah, a bit trickier, I've got to say. Where is CAD yen? Here we go. Yeah, it's the same as the Kiwi, unfortunately. You know, the interesting thing is that the commodity.
Well, no surprise, the commodity currency versus the risk-off currency.
Yeah, they got absolutely hammered. From memory, the CAD is actually, you know, about to have a half decent seasonal run, and COT data is actually pretty positive for the CAD as well. So not, you know, it's not the same as the pound, but if you look at this, what would I suggest?
Oh, they got their rate statement. That's what CAD has on Wednesday. Yeah, okay.
Yeah, it's got the rate statement, but it's all going to be about the well, probably anyway, about the actual statement rather than the actual release. It's that would suggest that that the Canadian dollar could be maybe off the cards. They are predicted to lower the rate from 4.75 to 4.50. But you know, this is the issue with this stuff, is that when you see red bar, I mean, we're looking at weekly charts here, red bar, red bar, red bar. At some point, the news that we're expecting gets priced in, and we're at a support zone here. It might come down a little bit further, but at what point do we say there's about another 200 pips there? You know, to the upside. You know, at what point do we say that actually what's known is priced in? And when I see that much movement down there, it's not that attractive anymore. So even this, you'd want to see. I would anyway. I'd really sort of I'd like to see this one just kind of come back up to maybe hug this line, because if it does that, then you've got a horizontal level over here as well. So then maybe dropping down, that would be a lot more attractive, maybe even creating a little head and shoulders up here.
Yeah.
You know, sorry, taking it around about into this zone here, which is going to be, you know, looking at more like next week after it's happened. Then actually, no, that's even later in the year. So that's a weekly chart. Don't know if I'd want to wait that long, actually.
No, that's Santa Claus.
Yeah, yeah, we don't want to wait for Santa Claus. Yeah, so yeah, but I'd still want to see a retracement, mate. I wouldn't be looking at this until we get to kind of like maybe 115, 50, something like that.
Yeah, look, I think we're both in the same opinion that we would like to be short the yen. Sorry, short anything against the yen, but not at the prices that we're being offered at the moment. That's pretty
Yeah,
much where I sit anyway, Lemeroy's. And thank you for your assertion or your interest in the show, number one, and for sharing those opinions. Very good.
yeah, yeah. Appreciate it.
I wanted to find out whether my assessment of Euro Aussie, sorry, Euro dollar short makes sense in your book as well.
It absolutely does. I don't know what your assessment is, but I do like the Eurodollar short as well.
Well, my assessment is the euro has some downside coming,
Yeah,
and the dollar's a question mark to some degree. But I believe, like I said last week, that the market is in for probably, I don't know, maybe even a period of risk off until the US election. Maybe not that long, but that's
yeah.
what I see the market as in a disquiet mode, and for that reason, the dollar should rally. Now, in my opinion, if the market doesn't like what it saw with Biden going, or does it matter if Biden goes? And I think it does, because I think the election is far more winnable now for the Democrats
Oh,
than it was
undoubtedly.
than it
Yeah,
was with him.
yeah, yeah, for sure. It definitely is much more winnable. Yeah, I mean, I think like looking at the chart, the range is evident, isn't it? I mean, we're sort of like we're definitely in a
Yep.
bit of a box here, and we're at the top end of that box. So I think that the technical I think preference at this particular point would be to see some downside. Looks like the box is something like that to me. But it's I mean, I suppose you could look at that one, but that looks like an outlier right now when you see a rejection there, rejection there. Looks like we're seeing a rejection here. You might even kind of draw another one along there. So we got sort of a few resistance zones within the resistance zone, but we're definitely at the top end. And last week's bar looks relatively explicit, suggesting that we are going to see some downside. And the interesting thing really with the euro is that the numbers that are kind of coming out aren't anywhere near as positive when you think about what the ECB could do. They're not as near as positive as the United Kingdom are. But things do get kind of lumped in as a region, and I think that
Yeah.
Europe, generally speaking, is it's still weaker than what's going on in the United States. And also think because of the Chinese situation, that does tend to affect the euro as well. What happens in China? So we are seeing some negativity kind of coming from that part of the globe. We're seeing some stalling, I think, of some of the positive aspects of the growth now coming into the eurozone as well. And we've got what is ultimately a very dovish central bank historically. So when you kind of, and then you kind of go to the United States and say, well, okay, well, the numbers are showing that we are getting some disinflation, but they're nowhere near as comfortable as people would like them to be. So I am with you 100%. I think the euro coming down against the dollar looks pretty likely in my view. When you look at the COT and the seasonals, it's relatively neutral in actual fact. But I think that will change as you kind of go through to next week, and maybe it's it's possible that it's a timing issue with what's going to happen with the euro as well. So I'm with you 100%. Timing it is going to be a little bit trickier. Looks like we're at a point of support right now, right on the lower end of that support line. So there's not really a trade at this stage. Yeah, it's a bit messy, isn't it? To suggest that we could take the trade just yet. Again, mate, it looks like we might be looking at a head and shoulders pattern of some sort. So left, head, right coming in here. And that
I'm
would
okay
leave
with the
us.
weekly. I'm giving it a chance to go straight through that.
Oh, cool. Okay, so if you're after the weekly, then it would be different, because this would be, I'd still be looking at this on this week, 24th. I'd be looking at potentially sort of like the right shoulder being created. So
Yep.
I think that there's an opportunity there. I'd be with you on the direction.
Cool. All right. I think they're pretty much our thoughts, guys, in the room. What have you got in terms of your thoughts about the week? Actually, just one more thing that we might discuss, and I know we kind of glossed over it last week when we were talking about what the market may or may not do in response to the shooting. And I'm going to mark myself as half right with the market showing a little bit of support for the dollar. It wasn't great, I've got to say, and that disappointed me to some degree. I thought there would be a far bigger reaction. So half right, I guess. The market didn't really do a lot, but I still did see a definite swing in market sentiment to risk off. I don't. Your thoughts
Yeah.
on that? Is that
Yeah, no, for sure, mate. And I suppose it does. We're seeing sort of like little pockets of the market just about kind of hold on to where it was, but yeah, for sure, there was definitely some risk off this comeback in. Whether that is to do with the shooting is difficult to say, but now you got Kamala Harris coming in as well, and if it's gone risk off predominantly because of well, would the market prefer to see a Republican party in or a Democrat party? And I think where it's really interesting is when you get into the crypto market, because Bitcoin particularly and the crypto market seems really keen on the Republicans. Donald Trump seems to be relatively pro Bitcoin. And his running mate seems to be relatively pro Bitcoin. I'm not sure of Kamala Harris's position, and if she's or dovish Bitcoin. I haven't seen the Bitcoin chart this morning, but if she's dovish Bitcoin, does that not dovish, sorry, bear well, yeah. I mean, let's say that. Let's say negative on the Bitcoin move. How's that affected that this morning?
Yeah,
The fact that she's now running, because I think you're right that the chance that she has an ability to actually, it's come down. It's off a little bit this morning, down to 1.17%. If she has the ability, if anybody has the ability to beat Donald Trump, it was not Biden. And he was kind of just not lucid enough. So now we've got Kamala Harris in the running, and you're right. The black vote is not quite as secure as it was for Donald Trump. Possibly you're going to get lots of women voting for Kamala Harris. I don't really know that much about her, if I'm honest, and I don't know what her chances are. But it's not a shoo-in as it was. It was after that shooting, it was a shoo-in. But now we've got August, September, October. We've got 3 months for people to kind of forget about all that. Timing is everything, just like it is in the market.
They won't be allowed to forget about it. Have you heard him the
No,
other night? I took a
no.
bullet. I took a bullet for you guys.
Yeah, but
It's Wild West stuff.
if the vote was a week after that happened, no question. I think you wouldn't even need to tell people. It was so fresh. It was such a monumental kind of point in time, really, and monumental sort of situation and scenario that I think that he would have been a shoo-in for sure. But it hasn't happened quite that way, and for that reason, I wonder whether the 3 months sort of like leading into the election actually sort of changes the chances quite significantly. Yes, he can remind him, but Kamala Harris has got plenty of chance to, put her stamp on it as well. And as I say, I don't know that much about her. I don't think she was that popular when she ran for vice president before. So I'm not sure what she's going to do, and I'm not sure what her angle is going to be.
Well, I guess in the next few days, weeks, we will definitely find out what that's going to be, because we'll be hearing a lot more of it. There's no doubt about that. So, apart from what we've already discussed, anything to add? Doesn't look
No,
like
mate,
anybody
no,
else. Oh, hang on.
no.
Oil daily in 4 hour from Gary. Yeah, we'll have a look at that in a tick. Sorry, mate, you go.
No, I did. There's not a lot really. I mean, you're absolutely right. The BOC is the probably the biggest news this week. We got some GDP from the United States on Thursday. CPI data from Japan, which could be quite, relatively telling, depending on what's going to kind of go on with that Japanese yen.
Lots of PMIs coming out, of course, both services and manufacturing, all over the place.
Yeah, lots of PMIs. Dollar is very weak this week historically, just to kind of like bring that into play. So, yeah, seasonally, not a good week for the dollar. Doesn't tend to be a good week for the dollar.
Okay.
Yeah.
Right, Gary wants us to look at oil, both on the
Okay.
daily and the 4 hour. If you got it up there,
Let me get it on.
I was looking for a breakout on this last week, and it didn't even get close to entry.
Where are we?
And of course, Lewis was telling us that he was short, so he's got some cash.
Yeah, this was a tricky one though. If we remember, because of the room that it had, to kind of actually get anywhere. XTR. Let me just take some of these away, and it's right on support now. It held that lower level there. Of course, with a bearish market, with market going risk off, you'd expect oil to be kind of coming down as well, but. It's bang on support now. I mean, there's a decent that was our horizontal level, wasn't it, along there, and it has come off. So, is there as much room? Oh, mind you, that's a pretty decent break.
Yep.
Yeah, I mean, a retracement to 80 dot spot 80 would make this pretty attractive. Oh, that's a lovely line actually. Yeah, 80 spot 80. We're at 79.80. So a $20 sorry, a 20-cent run to the upside. I think you'd be looking at the shorts. It's now broken through and kind of look at that. That was a decent looking move on Friday as well.
Yeah, there's a decent bounce off the trend line on the weekly as well. So it does look as though it wants to find that trend line you've got in the bottom there to me.
Yeah, it does, doesn't it, mate? Yeah. Yeah, looking for sells here. I wouldn't just put an order in, but looking for a sell signal around about the 80 spot 80. That would be attractive. It just sort of like just getting that sense that the market is turning right now, isn't it? You kind of getting sort of evidence stacking up. The yen is starting to find strength. The Swissies found some strength. The FTSE, the Nasdaq, the CAC are on. The DAX, the Nikkei, all of them finding some weakness. Oil finding some weakness. It's kind of like we're headed for that kind of risk off market, but that doesn't mean that things are that negative necessarily. We do have that seasonal patch where the markets just go and have a bit of a rest. Summer is notorious for that, isn't it? So,
absolutely.
Is that all it is? It may well be. I'm still quite comfortable in building some long positions in a few things here, but I do think we do need to be a lot more careful. And I do think there's more downside in some of this stuff as well, but I don't think it's that significant. I don't think we're getting downside because of huge negativity. I think when we hit the bottom area down here, this is a buy zone again. We're just kind of like it seemed to be in a little bit of a patch here, and we were just at the top end of it. The top end of the pattern, come down to the bottom end of the pattern, and then we'll try and buy it up again. And maybe this time, if we buy it up at the right time, hold and see if it breaks out. But it does look like we're in that zone right now where there's some negativity just floating back into the market.
Yeah, and I don't think the market, apart from intraday, is about to change anytime soon now. I don't see what drivers that. I think all the drivers are pretty much in the rearview mirror now.
Yeah, agreed.
Could be wrong, but that's how I see it. All right, guys, that's about it from us for this week, unless you've got any further observations or things you want us to look at, then we will give you a few seconds to do that. If not, we're done.
That we are. Yeah, we are. Actually, we're done. No, we're not quite done yet. Next week. Next week's our last Monday.
Yep.
For the
That's
month.
right. Actually, we best mention that. We're taking the month of August off, and that's just our normal, because it's a little bit extended this year because I'm off overseas and Ash is on holidays as well. So we won't be back until what's the date? Can't remember. First week in September anyway.
Yeah, first week in September is going to be the 2nd of September.
Yep. I'll be in the air, but you'll be here.
Yeah, I'll be here. Yeah, 2nd of September, I'll be back.
All right, guys. So next week we'll be here. The week after, not until the 2nd of September. Have a wonderful week ahead, and thanks for being our trading buddies for today. We look forward to your company next week. See you later, buddy.
See you soon, mate.
See you soon. As a matter